Welcome to Easy Accounting for All. In this video, we are going to talk about bank reconciliation, but before, we are going to find out what is the reconciliation in terms of accounting definitions. The purpose of the reconciliations, the bank reconciliation, steps to make a bank reconciliation, common bank reconciliation discrepancies, bank reconciliation practice example from AMP. AMP is a fictitious company that I create in my accounting cycle course 1 to 4 in previous videos. We are going to do the bank reconciliation report. So we are going to simplify how to present these reports. So let's talk about what is reconciliation in general terms. Reconciliation is the process of comparing two sets of detailed transactions. It has to be detailed, supported by source documents to ensure accuracy and consistency. It usually happens between the company's internal general ledger accounts and external statement. Again, this is in general. Types of reconciliation. We are talking about, we had internal reconciliation, which is pretty much between different software that supplies information into the accounting software. So we are going to talk about later, especially for inventory. That's probably one of the most situations where the total balance in inventory doesn't match with the total balance in accounting. But I'm going to explain that one in another video. Purpose of reconciliations. Identify the detailed transactions and the reason that explain the total discrepancies. Update books with missing transactions, specific using journal entries or using general journal entries. We already went through this explanation about journal entries and general journal entries concepts in my videos on accounting cycle course 1 to 4. Updating the books helps to get accurate records and balances. This is helpful to make decisions. Detect errors or frauds. Find and report fraudulent transactions and errors. Bank reconciliation. So let's start with the bank reconciliation. Bank reconciliation is the process of comparing the company's bank account records. That means you have the general ledger for a specific bank account with the bank statement to identify and explain the discrepancies. And again, in this video, we are going to work just manually or in Excel the reconciliation. We are not going to use any software, any accounting software to do that, because my goal is to people to understand exactly how that operates. And that's the same way that the computers do. But anyway, it's better just to have it clear in our minds. Steps to make bank reconciliations. A bank reconciliation. Get the bank statement. Get the bank account general ledger. Get a copy of previous bank reconciliation. If it is the first reconciliation, it means there is no previous reconciliation. But if no, it is very important always to have the previous reconciliation, because the previous reconciliation is going to be part of the following reconciliation and so on. But what is important to have the previous reconciliation? And here is the answer. Previous reconciliations are important because they list all the outstanding checks and all deposits in transit and any other transaction listed in that reconciliation. That is very important. So you have to make sure, if you had a previous reconciliation, that those discrepancies or those details or those transactions that appear there, it should be matched and disappear also with the next months, the next period. But it cannot be just like 4, 6, 7 months, no, months. So it has to be as quickly as possible. If not, you have to focus in those transactions and find out what's wrong, okay? Calculate the total discrepancy. Yeah, that's very important. You have the bank statement that shows a bank balance, and also you have the general ledger that shows the bank balance. So it doesn't match 100%, there is a discrepancy, and you have to find out what is the amount of the discrepancy. Start to match or compare transactions like deposits, payments, or checks, bank fees, interest income, and return deposits or checks. It is clear that today's date, the transaction listed before can be originated via ACH or any other electronic type of transfer, like a wire transfer, etc. So it's not just in paper or hard copies, or no, it could be electronic. So, but we have to consider everything. Make the corrections and adjustments as needed. Again, use the journal entries and or general journal entries. And create a final reconciliation. So what is the most common bank reconciliation discrepancies? I just list the most common from our books. Usually we can find these things. Outstanding checks. It means having been cleared or presented to the bank. Deposits in transit. It means it's money that we just sent it to the bank, but probably we did it a certain time or in between some holidays. The amount do not appear in the day that we just deposit. That can be, especially if it's at the end of the month, it could be appear in the first day of the following month. So that's deposit in transit. Bank fees and charges. All the banks charge something to keep your account, right? To manage your money through the system. So that's the bank charge. Interest earned. Some companies or some banks pay some money, just give you some interest over the money that you have deposited there. So that has to be part of the discrepancies in most of the cases. Policy checks from customers. Sometimes you just run with the reconciliation that a check that you deposit, it was bonds, were returned by the bank because different reasons. Usually it's not enough funds, okay, insufficient funds. Unclear ACH payments or any electronic payment options. In ACH payments, it usually happens when we miss one of the steps, or we just, according with the bank policy, we submit the ACH payment or the wire transfer after certain hour that they don't honor the payment in the same day, just to the following 24 hours or following day. So especially if you do at the end of the month, and let's say the bank has a policy that it has to, all the ACH payments or all the wire transfers should be processed before 11 a.m. and you do after that, that transaction is going to be reflected in the following business day. So that's part of the unclear ACH. Because in your books, all the things that I already mentioned, outstanding check, deposit transit, bank fees, they are already in your books, but not necessarily appears in the bank statement. Duplicate transaction in books, very usual. This happens especially when somebody in accounts payable, yes, especially if they have a different module that is called accounts payable, they just process probably a purchase order for one purchase, and after that the vendor send an invoice, and they process the invoice. So we have two different documents with the same for the same purchases. So you pay twice. That's one of the discrepancies that you can find in your reconciliation. EFT payments or receipts not recorded in books. EFT means electronic fund transfers. Some of the customers just they pay you using that system, which can be same ACH payment or wire transfer. But at the same time, you don't notice that one because they pay you, the bank just reflect that one at the end of the month, especially the last day of the month probably, but you don't have it in the following month, right? So in this case, that's why I say it is very important to do the daily bank reconciliation, because you can just catch that one in a daily basis. So if you do that, you can just make the adjustment right away. But if no, if that appear at some point in your statement and you don't have it, you have to put it back in your books. Fraudulent transactions, yeah. If you do the bank reconciliations daily, you can just catch these problems right away and call the bank and try to solve the problem right away, right? Especially with the counterfeit checks, that it happens very often. Obviously, today the same fraudulent transaction can be through the electronic payments, right? Where people hacking your account, so they take the money from there. So that's something that has to be cashed right away and just report to the bank. What is the reason, probably the discrepancy that happened from the bank statement? Something that you find in a bank statement. In other words, nothing that you do your size is in their bank side. So usually, very weird to happen, but transactions that are not below to the company but appears in the bank statement. Yeah, it happens sometimes. Either way, a deposit or a withdrawal that you don't know nothing about that, so you have to report it to the bank and let them know that that's incorrect. So most of the time the bank just correct that by themselves, but it is always good to have the daily bank reconciliation and be ahead of time and report to the bank. Duplicate transactions from one of the company's transactions that appear in the bank statement. It happens very often. Sometimes, remember that these programs or any software at the end has some humans, people doing just entries, and they can make mistakes. But as always, all the humans make some mistakes. We make mistakes, so that's what happened. So sometimes they just type in twice some transactions, and obviously at some point they're going to catch it by themselves. But if we do our bank reconciliation on a daily basis, it's going to be nice just to report it right away. Different checks or transaction number, it happens too. You said it, you just got the check, you have your checking number, the 1010 in your books, but when you just try to match that one in a bank statement, it is not 1010, it's 1001. Things like that, right? It's just an example. But it happened, yes, it happened. So all these things we have to consider when we do the reconciliation. Think about all these possibilities. And probably there any other more situation, but this is probably the most common situations. So let's talk about the bank reconciliation. So here we are. So we have our general ledger, bank reconciliation practice example for AMP. So our company name is Agro Maintenance and Parts AMP. This is a general ledger. This is from August 1st to August 31st from the year. So this is part of the exercise of the data that we extract in from our books that we create with the activities for AMP. And this information, you can find it in a accounting cycle course 1 to 4. You can find it in a video number 3. So you have a chance and you want to go back there, you're going to find this one. So this is an extraction of that general ledger from our AMP account. So this one here in the right side, this is the bank statement. Bank statement, this is the A and B bank. Bank statement, account name, Agro Maintenance and Parts AMP. We have a fictitious account number, right? But always all the bank statements has or reflect the account number. A statement period, August 1st from that year to August 31st from the same year. What you see here in this section, usually the bank statement has a statement period activity summary. So they just show you what is the beginning balance. In our case, it was 0 because we just started activities in August. So they show you what is the total deposits and additions, the withdrawals or subtractions, and they give you the ending balance as of August 31 that year. In this case, it's 32,895. Alright? So if you see in bank it's 32,895, but in here in our books it's 31,055. So we have to find out the amounts that create this discrepancy. But first we have to calculate the discrepancy. To do this, I'm going to move to Excel to do the reconciliation. Okay, here we are. So we have I say that this is the general ledger from August 1st to August 31st. And we are going to compare the transactions, okay, this is the daily transactions, okay, with the bank statement, A and B bank statement, account name, auto maintenance parts, account statement for the period August 1st to August 31st, same period, same time. So, this is the right bank statement with the right general ledger, so we have to start to compare the amounts. But in the first time, we know that we have $32,000 here, 895, and we have $31,055. So we have a discrepancy 1,840. Now, how do I calculate this one? It's simple. So we can just say plus this amount that is from our books, this is the balance, minus this amount. So now we have the reference point, the amount that we have to find out. Right? There should be some amounts that combined give me the exact amount here, 1,840. Okay. So the first things to do is just to compare transaction by transaction. In any accounting software, you have to mark, or there are some integration between the bank, the banks offer certain services, and they just allow you just the computer to connect with the bank and do electronic reconciliation. But if you do that, obviously you don't know exactly what's going on here. But the reason why I do this type of classes is because I want you to learn how the thing happen inside the software. Okay, anyway, we have here in a general ledger, we can just recap about this. We have the date, the journal entry, document number, descriptions, debits and credits, and I just highlighted the T account that we discussed in our accounting cycle course videos 1 to 4, and we have the balance. So we have here the date as well, descriptions, withdrawals, deposits, and balance. Now, I want to just draw your attention that this day should not be exactly the day that happened here, because this is when you did it, and this is going to reflect when the bank received the transaction. But it's not necessary, it has to be the same day, okay? What it has to be the same is the document number. Pretty much, especially for the checks or withdrawals or ACH, but for deposit, not necessary, okay? So we have that in our book, we have the beginning balance 0, and we notice that here, because this is a new account, the beginning balance is 02, okay? So let's start doing that one. In order to do this one, you can make a check mark, you can just put that, you can do it. If you do manually, you have to just point, in that way you know what transaction is missing at the end, okay? Or you just start to highlight it or point only the transaction that you can find it in both sides. Let's start. I'm going to highlight this one from here. Let's start with the deposit. We make a deposit, so let me highlight those one with a specific color here. Let's put this one, deposit 50,000. So we notice that we have here a deposit 2, okay, for 50,000, right? Again, we are reconciling the activity, not the balance here. That's the main thing at the end, but we are not going to touch this one at all. Now, that is very important, and this is my highly recommendation to you guys. If you do the reconciliation, please always match the document number with the amount, especially with checks. And the reason is because if you do just following the numbers, the amounts, it could be you have more than one same amount for different transactions. In other words, could be you have 3, 4, 5 times the number 1000 or any number of these. And if you start just to reconcile by a month without considering the document number, I can tell you that at some point you are going to reconcile certain documents or certain transactions that are not the real transaction that was clear at the bank. So that's why I highly recommend to follow always the document number with the amount. Okay? Anyway, let's start with the checks. So check 101 for 2400. Okay, we have it here. 101 for 2400. Perfect. Check 102 for 3500. Here 102 with 3500. Again, during my explanation, obviously here is still like a perfect situation, but it could be instead of them just to put 103, they put 130. Yeah, that's why it's important to have that clear comparison. 103, 1200, 103, 1200. Okay, so 104, here we have 142, we say 8000, and we have 8000 here too. 105, 700, 105, here 700. Good. 106, 300, 106, 300. Okay, good. So 107, check 107, 250, check 107, 250. Check 108, 600, check 108, 600. So check 110, 120, check 110, 120. We had the August, we just type here in our book the account analysis, which is part of the bank fees. So let's say we had the August bank charge or bank fees or account analysis, $35. We had $35 here for bank fees or account analysis or bank charges. Okay, 35. So at this point, just we don't have nothing left in our bank statement. So what we have left in our books are the transactions that are missing in our bank statement. So the one that are missing is the one that I don't highlighted. So that means we just check 101, 109 was good on August 31st as an example at the end of the month, right, for 1600. Also check 111 on August 31st to the owners for 1000. Also we just send a deposit in our books. We send in August 31st. We record there, but in a bank was probably posted with the following business day. That means probably September 1st or the first working day or business day for the following month. So we have 3 transactions, and these 3 transactions should give me the exactly total amount.
So what we have here, we have a deposit. So we say equal, just to for our present reference, we say equal 760 minus, we have to check here, 1600 minus 1000. So we have 1840, which is exactly the discrepancy that we calculate from the beginning. This is a short activity, a few transactions, but it is very important to do carefully because it could be, there are statements that could be just 10 pages or it's a lot of transactions. So if you have some specific way to highlight the one you found in between, and you were able to match in between the general ledger and the bank statement, so you're going to have the one that are not marked at all, right? That should give you exactly the discrepancy that you calculate at the beginning. So this is the way that the bank reconciliation are doing, and is the way that the computer or electronic reconciliation is working as well. Anyway, so this is the reconciliation. Now let's find out how to present the reconciliation, because remember, this reconciliation as August 31st in our example is going to be the beginning reconciliation for September, right? Reconciliations. And if we do daily reconciliation, that means that we expect that we do the reconciliations on September 1st, or the first business day in September. It could be this period clear. And it could be not in the first day. Probably, for example, this is for an employee. It could be the employee just keep it like there for 2-3 days or forgot to deposit that one. So let's see that this check or this 1600 stay there for more than 1 or 2 weeks. So the good way to do is just to call the employee and say, hey, listen, you haven't cashed your check. What happened? It could be he's give you the answer to you, oh, I forget about that. I don't know where I put it. Or he can just probably come to you and say, you know what, I lost my check. Or either way, he received electronic payment, let's put it that way, and he said, I haven't received my electronic payment, right? So you have to find out what happened. It could be the way that his account or her account and payroll system was set up incorrectly. So either way, you could check for him, never got through, or you just make an ACH payment or direct deposit, it never went through. So that's what is important, to have this reconciliation as a beginner reconciliation for the following month. And again, any discrepancy that you find, always you have to focus on that one. And looking into that to make sure that that has to disappear very quick in the following month or in the following day, depending. If you do the bank reconciliation on a daily basis, you are going to see during the month exactly how that disappears. Usually, the daily basis, you don't create reports, you just mark transactions. At the end of the month is when you just create a special formal report. Okay? So now let's move to the report, the final bank reconciliation. Okay, so let me highlight these ones a little bit, highlight these ones. Okay, so let me show you this one. This is the auto maintenance and parts A&P bank reconciliation for the month ended August 31st, or you can just say for the month of August. Okay, either way is fine. So you have the account number, because if you have more than one account, it's better to have the account number. You have 10, 15, 20, hundreds of accounts to reconcile, you have to put the account number. Not only for the bank reconciliation, for any account that you reconcile. So we have the book balance, 31,055. We have the bank statement, 32,895. And we have the total discrepancy, 1,840. That is the same discrepancy that we calculate from the beginning. Now you have to make a report that say, okay, the day, because it's very important to, because you are going to take this reconciliation from now on and the following reconciliation. It's good to know how old is the transaction that appeared in my previous reconciliation or in the following reconciliation. Let's see that as of December, when we do the reconciliation in December, we still have these transactions. Something is wrong. Something is totally wrong. Okay? So you have to find out what the wrong things. As I explained, for the direct deposit, that was the original account incorrect when they were set up in the payroll system, or because the employee forgot to cash this one. It's many possibilities, okay? So we had a discrepancy, we had the date, the document number, description, and on. So we know that we had outstanding deposit 760. Now we have just one deposit that is outstanding because it should appear in the first business day from the following month, that means September. So we have just one, but it could be more than one. Could be a long list here. Total outstanding deposit 760. Outstanding checks, so we list all the checks. Here we had two, it could be hundreds, depending the size of the company, the activity, it could be many. But in this case, it's just two. So we just added up, we have the total outstanding checks 260. If we just take this one, 760 minus 2,600, we have the 1,840 discrepancy. So if you add this one, the original one that you have the top, based on the account balance and the bank balance, you just subtract the total discrepancies, your balance should be zero. This is one way to present this transaction. It could be any, in terms of the format, the ways, the templates, you can just create any one that makes sense. In the meantime, I'm going to show you another two ways to do that. Okay, this is, but there is many ways to do or to present. But let me show another two ways to present the same reconciliation. Okay, let me hide here. So let's talk about this one. From this one, we are going to reconcile the bank reconciliations or our account. We are going to start from the book balance and we are going to arrive to the total bank statement balance. So what we do here, we say, okay, this is my bank balance. After we detect all the discrepancies, we have the bank balance, the book balance. So we say, okay, I had this deposit in my bank, in my books, but the bank doesn't have, so I had to subtract what the bank doesn't have. Okay, so the bank had it 760, so I had to, from the 31,000, I had to subtract the total outstanding deposit. Since I have already credit my general ledger, my books with the checks, but the bank haven't reduced that one from my check, I had to add that money into the account. So I added the 2,600 and I just get the bank statements balance. That's another way to present this one. Okay? So the only thing is that if you do this way, in here you know that you have zero discrepancy. In here you know that you have zero discrepancy either way, because the 32,000 bank balance here, right? Minus 32,895 that you have in your statement, the balance is zero as well. Okay? So let me put it here, zero balance. Okay, that's right now. Okay, it's zero. Right? This is another way to present the reconciliation. I personally like this one, but it's good too. Okay? So now let's move to another way to do. Okay? Which is the opposite. We are going to start with the bank balance to get to the book balance, which is pretty much the same. So let's put. Okay, so we have here, let me highlight it a little bit. It's too dark. Let's put it here. Okay, so we have a same way automated and parse AMP bank reconciliation for the month of August 31, account number, bank statement balance 32,895. So since we don't have this money there, we had to add it up. So plus outstanding deposit 760 minus the check that haven't been cleared, so 2,600. So we had 31,055. So that means we had the right breakdown of the discrepancies here because we were able to get the balance for books like here, the book balance. So the balance at the end, the discrepancy is 0. So this is different ways to present. Personally, I like the first one, but the other one is okay. There is another system, but I don't want to go through that. It's enough with these ones. I hope you just enjoy this video. And if you like and you just learning, please don't forget to subscribe and give me a like, right? And if you have the opportunity, please share with others. That's going to help me, and I'm be happy just to continue doing things that help people to understand more in detail certain things in accounting. I'm going to create a new video just to reconcile talking about inventory. So please don't miss that one. We are going to be I'm going to be making more videos in terms of reconciliations and talk about later on about payroll, other subjects. So thank you very much, and I hope to get your feedback, any questions, anything. I'm going to be happy to respond to them. Have a nice time. Bye.